Hello, everyone. Welcome to Finance News Weekly. I'm your host, bringing you the most important investment news from this past week.
This week was absolutely intense. Markets saw major volatility driven by AI valuation concerns. We're covering 22 critical stories today, including Fed and Bank of Japan decisions, big tech earnings, trade policy shifts, and much more.
Let's start with the headline story. U.S. stocks took a sharp hit Thursday, November 6th. The S&P 500 fell 1.12%, the Nasdaq dropped 1.9%, and the Dow lost 0.84%. What's driving this?
Two major factors. First, mounting concerns over sky-high AI stock valuations. Second, worrying signs from the labor market. The VIX fear gauge jumped 9%, showing investors are getting nervous.
The volatility wasn't limited to the U.S. Japan's Nikkei 225 plummeted 4.4% earlier this week as AI valuation fears spread globally. However, the index has recovered in subsequent sessions. Year over year, the Nikkei is still up an impressive 27.37%.
Now let's talk central banks. The Federal Reserve cut rates by 25 basis points in October, bringing the policy rate to 3.75% to 4%. But here's the thing, Fed officials are divided on the path forward.
A slim majority favors one more cut in 2025, with additional cuts expected through 2026 and 2027. Markets are pricing in a December cut, but given the division among officials, we could see increased volatility in rate expectations.
Across the Pacific, the Bank of Japan held rates steady at 0.5% at their October meeting, but the decision wasn't unanimous. Two board members actually pushed for a hike to 0.75%.
The BOJ also raised its inflation forecast for fiscal 2025 to 2.7%. Markets are expecting one more 25 basis point hike before year-end. This hawkish tilt could strengthen the yen and impact Japanese exporters.
Moving to trade policy. We saw a significant development this week. Following President Trump's meeting with President Xi on October 31st, the U.S. announced tariff reductions on November 4th.
Under this agreement, China committed to eliminate export controls on rare earth elements and critical minerals, address retaliation against U.S. semiconductor manufacturers, and purchase U.S. agricultural goods. The heightened tariffs are suspended until November 2026, though a baseline 10% tariff remains in place.
Now let's dive into big tech earnings. Starting with Nvidia, absolute powerhouse numbers. Q3 revenue hit $35.08 billion, beating expectations of $33.16 billion. Earnings per share came in at 81 cents versus 75 cents expected.
The real story is Nvidia's data center business, up 112% year over year to $30.8 billion, and they've begun shipping their next-generation Blackwell chips. Customers include Microsoft, Oracle, and OpenAI. They shipped 13,000 samples already.
Microsoft's Azure also delivered impressive results. Azure revenue surpassed $75 billion annually, growing 39% year over year. AI workloads contributed over 10 percentage points to that growth. Total company revenue reached $76.4 billion.
Amazon Web Services accelerated to 20% growth, the fastest pace since 2022. Q3 revenue hit $33 billion, exceeding the $32.42 billion expected. Operating income rose 9% to $11.4 billion. Amazon is investing heavily, with full-year CapEx expected to reach $125 billion for AI infrastructure.
Palantir also beat estimates with 63% revenue growth. But here's the interesting part. Despite crushing earnings, the stock actually fell 4% on valuation concerns. The company is trading at over 200 times forward earnings after surging 170% year-to-date.
Let's rapid-fire through more earnings highlights. Apple's iPhone sales rebounded in China, up 8% year-over-year in Q2, the first growth in 2 years. And with 78% of S&P 500 companies reporting, about 85% beat profit estimates, the best performance since 2021.
Tesla shareholders made headlines too. They approved Elon Musk's unprecedented $1 trillion performance-based pay package with a 75% vote. The package is divided into 12 tranches tied to ambitious stock value and earnings targets.
Now for sector highlights. Semiconductors are having a stellar year. The PHLX Semiconductor Index is up 16% year-to-date. AMB stock has surged 118.8% with Q3 revenue of $9.246 billion, up 36%. Intel returned to profitability with $13.7 billion in Q3 revenue, and its stock is up 77% this year.
Crypto markets saw some volatility. Bitcoin fell below $100,000 for the first time since June, currently trading around $110,164. Ethereum dropped to about $3,900. The total crypto market cap stands at $3.71 trillion, but the Fear and Greed Index is at low levels.
Oil prices continue their downward trend. Brent crude is forecast to fall to $62 per barrel in Q4 2025 and $52 per barrel by 2026. The driver? A massive supply glut. Global oil balances show a 1.9 million barrel per day surplus since the start of the year.
A few more quick updates. Japan's Nikkei topped 50,000 for the first time ever in October, though it later retreated. Japanese firms committed to a $550 billion investment package. And the Supreme Court hearing on Trump's tariffs raised hopes for potential duty rollbacks.
One final note, a Trump administration official stated this week that the AI industry will receive no federal bailout. This triggered fresh selling in highly valued AI stocks and added to valuation concerns we discussed earlier.
So what's the bottom line for investors? This week showed us that AI valuations are under intense scrutiny. Central banks remain cautiously accommodative, big tech earnings are strong, but the bar is high, and geopolitical tensions are easing somewhat with the US-China trade thaw.
Looking ahead, here are the key events to watch next week. We have major economic data releases, including US CPI inflation numbers, several more earnings reports from mid-cap companies, and any updates on the Fed's December rate decision will be crucial.
That wraps up Finance News Weekly, episode 04. Thanks so much for watching. If you found this helpful, please subscribe to our channel and hit the bell icon for notifications. We'll be back next week with more market insights.
Remember, all information presented is for educational purposes only and should not be considered investment advice. Always do your own research and consult with a financial advisor before making investment decisions. See you next week.